All right, good morning, everybody. What's going on? So I wanted to open up the market update with just looking at exactly where perps are compared to spot. And I think something is off here because the BTC spot prices are like trading well below 16,400 and the perps are trading somewhere around 16,800. I think this thing is broken right now. I've created this other list. So I like to look at, okay, so I call this like my spreads BTC list. And this list is particularly important when the market gets dislocated, especially in like high volatility times. Typically, when you see like big drops, like the FTX drop that happened, or in June when we had the Three Arrows Capital Do Kwon blow up, or March 2020. And so typically you want to focus on the pairs right here of, so this pair right here is the BTC spot pair on Coinbase. This one is Bitfinex. Again, these are all spot, right? Binance US, Bitstamp, Binance International, and then Kraken. Okay, so these are all the spot pairs, and these are the futures. The futures contracts, I have Binance, Femex, Bybit, and then BitMEX, the March 2023 contract. I need to add more of the long dated contracts here, like the March, the September one as well. So I'll add that, but this is important. And so point is, like, the reason of me pointing this out to you is, make sure you create your own separate list, because here's what happens. Okay, I'll tell you guys an example of when the market starts getting dislocated and how to spot. We may be completely, blown up and bottomed out because the spreads are too wide. Okay, so here's what happens. Spot may be trading like this, 16,800, 16,700, 16,600. And perps in a real market blowdown, right? Let's just say we're really nuking. Perps will be trading 300, 400, 500, maybe $1,000 lower than spot. And when you see this spread like this much of a difference between spot up here and futures, futures down here, this is, in my opinion, where the market has pretty much bottomed out. Okay, and again, the spread could stay wide for a while, but it's not going to be days or weeks. It will probably be maybe 24 hours, maybe 2 or 3 days at most. Okay, so look for situations like this where you do see the market being completely dislocated, and that would probably mark a local low BTC and probably other aspects of the market. Okay, so anyway, I just wanted to show you all that. Whenever I see some issues here happening on the aggregate charts, I just go back to my list, which is futures, BTC contracts, and then spot. Okay, so price action wise, right? Like, what are we seeing? Again, we talked about this before. This was CPI, this was FOMC. Now we sold off. Okay. Not only that, you can kind of look at it on a daily basis. We came into the previous June low, aggressively tagged into that level, and then broke down, back inside. That's your typical deviation. The other way you could look at it is we banged right into the pivot. We banged right into this green line that you're seeing, which is the VWAP quarterly. We banged right into the June low, and we broke back down inside. And we broke back down inside the monthly open too, which is around $17,180. Okay, so all in all, the market right now is effectively telling you things are bad, shit is weak. Okay, now we already know that, right? We already know that the market is looking like crap. It doesn't bode too well headed into the Christmas time as well as New Year's. But does that mean we're going to drop right away? If so, how deep do we go? I think that remains to be seen. I'm particularly just uncertain, but I'm a little bit more confident that we may have one more leg down. The one more leg down may be like this, and then chop into next year and then drop. So I'm not quite sure if we're just going to do this, break, chop, and break down. I'm not quite sure, just because you want to see, first of all, BTC and crypto in relation to, of course, the stock market, right? I pointed this out again last week. Equity markets, as we were headed into last week, the FOMC CPI data, we spiked up, pretty much banged into the descending trend line resistance, this yellow line, the 200-day moving average, which is this orange line, and this, let me make this a different color. Let me see if I can make this, I don't know, like a pink or something, like a bright pink. Is pink used anywhere else? I don't think so. Actually, let's focus on black. Oh, shit. That's a different one. Okay, forget it. I'll just leave it as yellow. Anyway, so point is, like, view up yearly right there, right? We banged into that. All three critical levels we pretty much smashed into and then sold off, confirming this head and shoulders style pattern. Okay, so all in all, the market is kind of signifying that, okay, things are looking, pretty gruesome right now, pretty weak on the equities front. And of course, crypto itself is pretty much confirming that, right? The other way to look at the market is, from a news standpoint, right? We already know that for the most part, we had the FTX blow up right here. It would take, probably like for another leg down, it would take some level of like bad news, I want to say, or some light is shed upon Binance or FTX, or even, DCG, right? Barry Silver has told us, like, he holds, these assets in quite significant size. Maybe he has to sell down some of these assets to sort of pay off $2 billion in debt that he has. We also know that the biggest product of Barry Silbert's fund, so DCG, owns basically and created this product, the GBTC product. And you can see since the beginning of the year, right, the GBTC discount has been widening. Currently, it's at a 48% discount. If you look at GBTC as a asset, it looks absolutely horrible. Okay, you can kind of see GBTC right now is pretty close to the March 2020 lows, right? That is really, really bad. So as the GBTC product starts to unwind and break down further, who knows? Maybe that causes more pressure on DCG. Point is, all in all, the news itself doesn't really look great for crypto, but doesn't mean like, you have to assume it's going to get worse or DCG has to go bankrupt. Just wait for it, wait for the dominoes to fall. Until then, like I said, right, keep in mind that we are still looking at this sort of range in the market. And until this range breaks to the upside or the downside, it's still a range trade, right? If this is trading lower, well, then it's going to range low. Yeah, it might break lower, but let it smash through the lows. And then, you can consider, I don't know, getting short for a quick move from, I don't know, from the lows all the way to like 13.5 or 12,000 or something, right? If that's your prerogative. Until then, maybe you kind of just trade this range just for now. Okay. Again, non-investment advice. All right. Other way to look at the market, again, other news that's kind of coming out is we know that there's a lot of exchange outflows that have happened. About 90K BTC has flown out of exchanges, and Binance's BTC balance is now below 15K, which is pretty much, the levels seen during the FTX collapse. So Binance had about $69 billion in their wallet about 1 month ago in total assets held. And now that's declined by 21% to 55 billion. Here's the proof from Nansen of Binance's, wallets and proofs. That's not good, right? Obviously, the real question is like, what are Binance's liabilities, right? We know how much they hold, but what about their liabilities? Like, how much total customer funds do they actually hold? We know these are assets that Binance holds. Some of that could be Binance's own assets. Some of it could be CZ. Some of it could be from their employees, from other funds and institutions. But what about customer assets? And then on top of that, like, what about loans and liabilities, right? Do they owe anyone money? Are they caught in investments or margin risk or any other issues that were similar to FTX. So those things we don't know, right? What about their risk and money on other protocols? Like, what if they had money on Aave or Solana, Solend, or MakerDAO or Sushi? And as the prices go down, what if a part of their position is going to get liquidated unless they top off more money into that position, right? So these are all things that are unknown. And when they're unknown, you kind of have to be cautious when you see, this kind of drop. Whoops, where is it? When you see this kind of drop right here, 21% down in terms of assets held, you just got to be cautious. I'm not trying to spread FUD or anything. All I'm saying is, just be careful in the current landscape of things, whether it's Bybit or Binance or, OKX or wherever you trade. Okay. All right. The other thing I want to point out to you is something that I saw from Crypto Sniper, something that I really like. This is a comparison of BTC, I think crypto market cap, BTC market cap compared to the NASDAQ market cap, if I'm not mistaken, right? If you look at the overall trend, basically since top of 2021, this is 2022 starting right here. Look at the overall trend. BTC is actually trading down as a relative value compared to NASDAQ as a larger, market cap, right? And obviously that makes sense because crypto market cap as a whole has been eviscerated over the last year. So, but the point is, like, I just wanted to point this out to you so you can kind of see the overall trend of BTC compared to NASDAQ. And then of course, this little funnel that we're building right now, if we build a funnel like this, like these channels, and then we break down, look at this thing right here as a potential breakdown to the downside, which could flush, overall like BTC market cap another, 20 or 30% to the downside. Okay. Same thing right here. We see a mini funnel being created, which is this funnel right here. If this breaks down, my next level for target is 16. Okay. That's like my big target that I would be watching out for. All right. So 16K flat is the next level. If you are looking for a potential shorting opportunity, right, I would take the trade like this, exactly like that, right into 16 flat. Okay. So you're risking 1.4 for a 4.3% gain, right? That's pretty solid, I think. So again, not telling you to take the trade or anything, not investment advice, just letting you know, like, that could be a potential trade outlook that may be popping up. Similar to, I would say, ETH. I think ETH is also kind of like that. Maybe stop a little bit deeper because ETH can run higher in terms of running stops. And I think ETH probably targets somewhere around like $1,100, I want to say, so you're risking 2.5 for about 6.8% move. That's also pretty solid. Okay. All right. What else do we got? I do want to share this one thing. So here's how I can pull it up. All right. So first, obviously, we've talked about total market cap, right? We see that total market cap RSI right here, which is just, a metric for momentum, has broken out of its descending channel, tried to, trade higher, but in fact, it's really just moved sideways. It's basically moved, in this 30-point level, right? If the market were to further break down, and by the way, right, in terms of total market cap, especially if you look at it on a monthly basis, it kind of looks pretty bad because here's sort of the June low right there. And the total market cap right now, it looks like it wants to force lower from here. The last month's market cap already wicked lower, but now this current monthly candle is already sitting on the June low. Okay. So why is that important? Well, first of all, in the RSI perspective, we know that total market cap can go down further and it could get pretty extreme to the downside. Okay. The other way to look at the market is, on a weekly basis, right? If we believe that similar to BTC on a weekly basis, we have this sort of big descending, big ascending, trend line support level right here. And then of course, an SR level, right there, right around 12,000 or so. If we start breaking down in the next few weeks, BTC can go tag all the way down to about $12,000, which is about 28% move. Okay. At the same time, total market cap from here could also tap its ascending trendline support level, which happens to be about 42% as a drop. So again, you can kind of see that level, 30% drop in BTC, about a 40% drop in total market cap, right? That means that, altcoins could go down significantly. BTC could go down 30% by just, pure price. And that may create sort of your opportunity for a potential bottom. And again, like I said earlier, if you want to really find, in the nitty gritty, like where the bottoms are going to be, watch these spreads really, really, spread apart, blow out completely between the spot and the futures contract. Okay. All right. I think that's really about it. I mean, altcoins wise, there's really not a whole lot to pay attention to. Things look pretty bad. Obviously, Near Protocol, which is, the DCG big portfolio asset, looks way worse than many other assets. I think Solana still also looks like crap. Solana also looks like, it's about to take a leg lower. If it does, watch out again for this low right here in November around $11 or so. For ETH, I think ETH is kind of interesting because ETH has this big ascending trendline support. If ETH does aggressively break down, right? Personally, I think it's going to be really, really hard for ETH to break $800 just because that's a pretty TSR level. I guess it could get ugly. Like what could happen is, something like this, right? We drop here, chop, chop, chop into next year, keep grinding, drop, chop, chop, drop. By the end of next year, maybe we'll be at like 400 or 500. And then we may begin our journey like by the end of next year, something like that. But again, that's just simply based on this trend line, right? And the trend line doesn't mean anything. It doesn't mean we have to tap it. It just, excuse me, it's just something that's there. Excuse me. So yeah, we talked about centralized exchanges. Ooh, I do want to point one thing out. So again, bear markets get tough, right? We have families, we have jobs, we have businesses, other things that we do aside from trading crypto or investing in crypto. I think you guys should read this thread by Tom Dante. Really, really smart guy. Someone I really, respect and, see as like someone to work towards as a trader and as an investor. And, one thing that he points out is, he said, I'm frequently asked by how one should trade within a full-time job. I did this for many years. And actual fact, I built the record I used to get into a prop whilst working a 9-to-5. And I'll tell you not only his story, but mine too. For the longest time, I worked either part-time or full-time in consulting. And even in bear markets, even now, I like to do work on the side. Because when the markets are rough and I feel like trading itself is not giving me enough income, right? I don't like to just start tapping into my savings. I don't like to just start selling my BTC to pay for my life expenses. I'd rather put my money and my mind. I'd rather put my mind to work, my body and labor to work to make sure that I get that passive income. And in that passive income, you make some money here and there to maybe reinvest in the market, pay for your life expenses, and not have to worry about crypto going down further. So anyway, I encourage you guys to read this thread. I think you'll like it a lot. All right. Anyway, that's pretty much all I have, everybody. All right. Thank you so much for listening. I'll catch up with y'all real soon. Cheers.